Rule 138. All investors become traders every time they buy or sell. Whether you're investing or trading, it's vitally important to get the market sentiment. You don't want to take your account out into stormy seas. You might lose everything. But always remember Rule 1. Only knowledge creates profit. Now, what does this mean? You must know what you're doing. Before you trade, before you invest, you must do a market scan. And that is what we go through each day on the channel. Elite Service members, the monthly video is now out. It is an incredible video. You may have to watch it a couple of times. It's just so packed with knowledge and an approach that can save your account and prosper your financial future. To understand market sentiment, we start with US sector performance. All sectors were up 0.3%. Energy and information technology did the best. Consumer staples and consumer discretionary did the worst. Now, why do we look here? And why is it important? If all the sectors are red, that means that the market in totality is coming down. Generally, we'll get some green, we'll get some red, but the markets are just eking out a very small percentage gain. The higher the percentage gain across all sectors, the more confidence people have of putting their money into the markets. And that includes all markets. Looking at to detect stormy weather inside financial markets, we can look at the Fear and Greed Index. This is currently 51 for the US market. That means it's neutral sentiment. Neutral sentiment is neither bullish nor bearish. It's kind of undecided. One thing to be aware of, when we approach extreme greed readings on Fear and Greed Index, that's typically a topping signal. Extreme fear index readings are typically the best time to get in. But often people will not be in the market. They see their portfolios go down, they say, damn it, they destroy their desks, they scream and yell, curse, and walk away from the market at the exact time when the market recovers. It's not the volatility that causes problems, it's a reaction to volatility. And when we look at the Crypto Fear and Greed Index, it's currently 43. People are inside the fear zone of the markets, and you can see that fear zone has been continuing for some time. Reading the weather is incredibly important, so going into the headlines of major financial publications can be a really good idea. Mexico plans a 50% tariff on Chinese cars before the US and Canada talks. And President Trump is trying to get India to go along with it and break from Russia and China. So the president is floating new tariffs to target China, India, and Russia. When people are new to financial markets, they just look at the market. Is it going green? Therefore buy. Is it going red? Therefore sell. There is a much, much better way of doing it. In fact, if you do that, if you're buying on the green and selling on the red, your account will bleed. In other news, an Oracle surge lifts the S&P 500 to a new record. The real issue is to don't chase price but to prepare. For example, Nvidia did really well. Look at Oracle, it just bolted up. And Apple came down, Amazon came down, Meta came down. Now, what people typically do, they don't dollar cost average in, although that's what people say they do. But what they actually do, they see red, they sell. Why? Because rule number 1, don't lose money. Warren Buffett. Financial markets can really play with your mindset. That's why I suggest just go to @CTKS Method on YouTube. Make sure that you subscribe to that and just go to the playlist area. On the playlist area, you'll see CTKS Trading and Investing Music. This has some excellent, exceptional songs in there, which are just literally little mini masterclasses on how to get your philosophy, attitude, and focus absolutely sharp inside the markets. For example, if you're too scared to buy, too scared to sell, too scared to hold, you know that you must listen to Chicken Trader. It's an awesome song. It will really help you out. And that's where everybody starts, so it's just a rite of passage. Storm clouds typically gather when high-impact economic data releases come out. Now, the core PPI and the PPI month-on-month, which is just the producer price index, which is a leading indicator of where the CPI or the consumer price index can go, that was way lower than the forecast. Now, that is really good because we would anticipate that tariffs would be increasing producer costs. And actually, we saw the opposite. Producer costs were coming down. This is almost guaranteeing a rate cut. A lot of people will just turn to the news to try to figure out if a rate cut is coming through. We don't do things like that. We're an institution of one. We go straight to the data source. The probability of a rate cut is currently 100%. And that's occurring in less than a week. There's a 92% probability of a 25 basis point decrease and 8% probability of a 50 basis point decrease. We don't want this one. This one will send shockwaves into the market, and the market could absolutely throw up. Inside our community, we don't believe in bull markets, we don't believe in bear markets, we believe in eagle markets. Eagle markets move up and down, and we know our timing. We already know the structure across markets because of level 1 and level 2 standard certification. We can make money in any market condition, and so can you. When we look into the futures, we can see very mild positive on the major market indexes and very mild positive on the VIX. Gold and silver just eking out just a borderline gain, borderline loss. Palladium, platinum, the standout is oil. And right down here in the corner under currencies, Bitcoin is mildly positive. Looking through the crypto market across the past 24 hours, we can see that Bitcoin is currently up 2%. Ethereum, not that great. XRP, nearly a percentage up. BNB, just over 1% up. Good old Solana. We talked about Solana being really strong, and boy oh boy, is it. The greatest gainers in the past 24 hours, Pump, AVAX, MYX, Mantle, Ondo, Pith, Farcoin, why not, Hype, Radium, LDO, Render, and Litecoin. The greatest losers in the past 24 hours, Story, ENA, Sky, Sonic, Celestia, For, The Graph, Injective, XDC, Arbitrum, Zcash, and Pi. Understanding market sentiment is absolutely vital, and when looking across a heat map, we can see we've got some green, and Bitcoin has done pretty damn well. This is where the majority of traders and investors absolutely stop. They've been told not to just put any time into TA or technical analysis. After all, it's just tea leaf reading. Or is it? Most people make their buying and selling decisions based on a heat map like this, and they wonder why their account gets absolutely decimated. We must look more deeply. For example, if you are interested in getting into Solana, where do you know? Where is the support? Where is the resistance? If you wanted to get into Bitcoin, where's that support and resistance? What about the support and resistance on Ethereum? And what type of support and resistance? Retail support and resistance, which means blows around in the wind, or CTKS structural resistance, which means 2 levels of standard certification. To take advantage of the tsunamis that happen inside financial markets, you must know where support and resistance are. It's literally rule number 1, only knowledge creates profit. The single most important thing that you can ever do is to understand where support and resistance levels are. Price is not random. It doesn't move around randomly. A lot of people think it does because they don't mark up their charts with 2 levels of standard certification. This is level 1 standard certification. And level 2 standard certification is where all the magic occurs. Now, the only reason I'm showing you this is to understand when you look at the lines, which are called CTKS levels, they're structural support and structural resistance levels, which are the most powerful across any TA methodology. Actually, they're the future of technical analysis. I was mentioning before that the September method service video is out. All inside the service, you get the structural levels as a trading view indicator on every single one of these charts, as well as CTKS paths. CTKS paths show where price should go in relationship to structure, and that's all available at ctksmethod.org. You can get the cheat sheet absolutely free. We don't have surprises, we have stacking of probabilities. We know where the resistance levels are, we know where the support levels are. We know if things are getting ready to break out or to break down. We also know why the markets move the way they do, and that is by looking through the cheat sheet. Row 1 of the cheat sheet is the VIX, the DXY US dollar currency index, dollar yen, the 10-year, the 2-year, and oil. What we noticed in the past trading session, the VIX fell down and then spiked up. Now, when the VIX falls down, we expect risk-on asset classes such as Bitcoin and the stock market to do this kind of move, an inverted kind of move. But as the VIX came up, look at what it did to Bitcoin. It flattened it out. And it's not going to do this just to Bitcoin, it's going to do it to the stock market as well. So if you were inside Apple or Nvidia, Tesla, Strategy, any stock inside the market, and you saw the markets absolutely go for it and then start to come down, it's the VIX. The definition of a gambler is just somebody who throws money into something and doesn't pay any attention to what the risk is and doesn't try to guard their capital. The definition of a professional gambler is someone who runs the numbers, understands what all the probabilities are, and makes consistent profits. If you want to gamble, be a professional. Professionals do not guess, they see, they know. So, if the VIX is going up, expect the markets to come down, and the markets mean Bitcoin and the stock market. With the weaker than anticipated CPI, the probability of a rate cut is absolutely on the cards, and that's why we saw the yields come back. But you note here that the 2-year has basically come back to this point, which would be this point on the 10-year. The DXY has gone up and oil has gone up as well. There's a lot to know about markets, and there's no way about it. If you want to be a professional, if you want to be consistently profitable, you must understand the markets. You can't just guess, you can't hope. That's not a strategy, that's disaster. What we saw inside row 2, which is a basic counterpart to row 1, is junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper. We saw that as Bitcoin came up because the VIX came down, and the yields also came down before they bounced because the VIX started to come up. We saw junk bonds just do a big huge rally, just called green fire, and then proceed to decay. What did we see with gold? Gold spiked up and has continued on down. And you notice this divergence now between Bitcoin and gold. We would expect a continuation under these conditions, so just something to bear in mind. And inside the service video, I let the members, the elite members, know that there are some really important signals that they have to look at in terms of gold and silver and the main markets and also crypto. It was a really deep dive. I hope you liked it. Now we can also see that the euro dollar got pretty much crushed, but the Aussie dollar, which is a resource-based dollar, did much better. Copper is going up, and copper is aligning itself pretty much with the crypto market at the moment. A lot of people look at crypto like somebody that you don't want to know. It's like that weird guy that turns up at family events. But this weird guy is a market oracle. You really want to get advice from that blue line. That is Bitcoin. Popping across to row 3, which is the S&P 500, the Dow, the Nasdaq, and the Russell. What we can see here, as the VIX went down, it just pushed all that risk-on behavior, and look at the S&P 500. Broke out to an all-time new high and then proceeded to sell down. We're starting to see potential of a turnaround here, but of course the main markets have gone to sleep. If only they would like crypto, we could all just trade them 24/7 by 365. Oh, what joy! Looking at the NASDAQ came down as the VIX. Look at that. It absolutely retraced it all. What about the Dow? The Dow is weak. It didn't even participate. What about the Russell? Yeah, it went and then cratered. Now, what is this telling you about storm clouds? It should be saying there are storm clouds on the horizon. Just don't break out the suntan lotion just yet. Row 4 of the cheat sheet is trying to gauge the weather under the major market indexes. And we can see that there's Apple, Microsoft, Strategy, Tesla, and Nvidia. When the main markets came up, Apple had been doing really well. We had profit taking there. Tesla came up with the market and has since sold down. What about Microsoft? Sparked up, then retraced. This is all the VIX, but this is important and something that I was mentioning to the members inside the service. We want Nvidia to do well, and it is. And what about Strategy? Strategy got absolutely whacked. In on the green fire, down the stairs to the basement of hell. And talking about that, there's a CTKS song that is literally called Green Fire. It is a ripping song. It will really help you out. Getting into row 5, which is the crypto market, total crypto market cap, Bitcoin and Ethereum. One thing to note, you can see as Bitcoin came up, because the main markets opened, the VIX cratered, and then the VIX recovered and put all of this negative price momentum into the crypto market. But look at this, after the US markets closed, people were buying the dip. This is actually really constructive price action. This is exactly what we want to see. And this was market-wide buying across the crypto sector. And Bitcoin did the same thing. Look at this following. What is that line there? That line is total crypto market cap. It just gives you an indication that if you're investing in some alt, which is of course not Bitcoin, it could be XRP or ADA or Doge or anything else, that total crypto market cap gives you a line that helps you to understand where those projects are going. And looking at ETH just acted like so many tech stocks. It just reversed all of that gain. In fact, Pepe did pretty much exactly the same thing, and now it's starting to recover. Looking into Bitcoin, we saw that at that 114,200 mark, and we've been talking about these kind of levels for a little while now, we want to see price getting above around the $13,000 level, and it is still reasonably constructive. We have had a pullback, but there's been no break in very short-term structure, so this does favor an upside potential move. Just keep your eyes on the VIX. If the VIX starts to spike up, just pay attention to that. But so far, if we're looking at our cuts, it's looking really good. CTKS cuts will absolutely make you rich. Now, if price comes down, we expect support from 113,000 around the 112,600. So if we get negative price momentum, we expect to get caught around here. We might go down to around that 112,000, but we know exactly where the structural levels of support and structural levels of resistance are inside the market. Now, this is really important. A lot of people say that technical analysis is tea leaf reading. Well, I have to admit, having been trained in finance and done my work, all of my work inside the financial field, it's a fair approximation. So, TA through 2 levels of standard certification is not tea leaf reading. It's absolute science. We go through all of price history, not just recent price. And we can see above that 114,200, as soon as we get up to around that 114,800, we're looking pretty good. And we could bolt up to 115,800 if we get continued positive momentum inside the markets. The key to understand, these are not random lines. They're drawn through 2 levels of standard certification and provided inside the service for people who are too busy to mark up the charts themselves. But it's really good to have the skills. We know that in the past 24 hours, ETH came up because the VIX went down. and Bitcoin also came up. But we also saw that Ethereum just reduced by and below all of this rally. This unfortunately is all too common. So when we throw on the indicator from the service, we can see up at this 44.30, we had a level of overhead structural resistance. We came up to that, structurally failed. The 44.10 mark, we did catch price for a little while and then got a structural failure. As soon as you get a structural failure, you're putting the lower level of CTKS structure on the map. So as soon as we see this, we anticipate this. As soon as we see this, we anticipate this. As soon as we see this, we anticipate this. Now, what it means is that we need to get a CTKS cut in order to feel more confident about re-entering the position. Hunting for opportunities is really important. When we look at row 6, which is Litecoin, Bitcoin Cash, Binance Coin, BNB, and Ethereum Classic, what did we notice here? Bitcoin really went up as Litecoin was late to the party and has shown a degree of strength. What about Bitcoin Cash? Bitcoin Cash was pretty much late to the party and has shown pretty much no strength. Binance Coin doing a fair job but not as strong as the push up in Bitcoin. Now, what is this because of? This is also important to read this kind of temperature inside the market. People are going into the major projects such as Bitcoin because they're concerned about upcoming data releases. What about Ethereum Classic? Well, Ethereum Classic held off a little bit better than what ETH did. You can see that Ethereum Classic is now here. Ethereum is like down here relatively. As a part of Level 2 Standard Certification, you draw what are called CTKS paths. Now, a CTKS path shows you just visually where structural resistance and support are likely to be hit inside the market from 3 dimensions. A positive dimension, that is if price goes positive, a neutral dimension for consolidation, a negative dimension for a retracement. And it's vital to think under these 3 conditions at all times. Gamblers just say, it's going to work out in my favor, I just know it, and then they lose all their money. It absolutely sucks to gamble, but if you want to be a gambler, be a professional gambler. Run the numbers, know if you should hold or if you should fold. Gauge the market on the cards that are played next. Now, one thing inside BNB structure, if we start to get going here, we could really get going. BNB did really exceptionally well. As the VIX cratered, it pushed Bitcoin and the sub-projects up, BNB included. We can see that level of overhead structural resistance at 899. That 899 level was a bit of a problem for BNB. It passed through it, couldn't consolidate, so it had a positive CTKS gap, so we were watching for reactions around here. One of the things underneath all of this structure is a lot more structure. BNB could do very well, but it depends on the VIX, it depends on Bitcoin. Please let me know, do you trade or invest in Binance Coin? And if you do, 918 is the level to watch towards the upside. We could reach there really quickly if we get sustained momentum inside Bitcoin, which will mean the VIX is coming down, which will mean the futures of the major market indexes are going up. If that doesn't happen, if the opposite happens, the bear case is support around the 882. Knowing your structural levels is absolutely vital. When we look at row 7, which is ADA, Solana, Doge, XRP, we can see that ADA just suffered that same kind of fate that everything suffered. When the VIX came down, everything just rallied, but when the VIX started to come back up, all of that negative price momentum was inside ADA's chart. Now, a lot of people don't know about the intercorrelations and interconnections between the stock market and the crypto market, and they're consistently worried about not understanding what's going on. And the vast majority of influencers have no concept at all. The overwhelming narrative inside the crypto space is come in and gamble, you'll make a fortune. But gamblers don't win. Professional gamblers win. If you want to be a professional gambler, please just subscribe to our channel because we'll help you to get there. And if you want to be more of a financial and emotional blessing to yourself and those you love, we don't risk. Professionals do not risk. A lot of times I say don't be a gambler, but being a professional gambler is absolutely fine. That is fine because they're not gambling. To not gamble, just keep your eye on structure. We can see that Solana was doing really well. Solana is very strong, and Doge is getting a little bit spiky, and Doge does tend to do that. There's some degree of weakness inside Doge because Doge has been coming up so strongly for so long. Profit taking will override these charts sooner or later. All of these spikes tend to indicate that. So this is just like understanding how the weather is blowing. When you're a fisherman, when you go out and you do your fishing, you have to keep your eye on the weather as you're fishing, not just before you leave. If a tsunami is just starting to come up, you better turn your boat around and go back to shore. But if the sun comes out, wow, fish caught aplenty. Now, XRP is looking pretty interesting at the moment. If we get a sustained kick up in Bitcoin, I think XRP could do quite well. Most traders and investors get wrecked because of volatility. As a professional, you need to look into the market and understand intercorrelation. Total crypto market cap will largely decide where the alts and also Bitcoin go. We've got this level of structural support. If we fail from this level, we expect negative price momentum. If this level holds, we get above this specific level, that opens up the 3.92 and a peak above where we spiked previously. This is what's going to move XRP's chart the most. Turning on the structure for XRP, we can see all of this overhead structural resistance that played into that VIX decay and the main market and the crypto spike up. And we can also see that there were so many structural failures here that opened up lower levels of structure. Right now, we're being caught by total crypto market cap structural support. It is vital that we continue to remain above support in total. XRP is currently 298.36. If we get that sustained upward momentum, the $3 mark becomes absolutely on the cards. If you're new to the community and you've made it this far, you are absolutely awesome. You belong here. We have the best community on YouTube and you're very welcome. And to all the CTKS family, Kate and I are so honored that we get to share this time together. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.